Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some data and charts in legacy land. And I'm getting pretty bearish. I had this wave of existential dread today looking at some of these charts. I'll get to that in a second. First, though, the Bitcoin flows from James, global flows here. Weekly record at 2.7 billion inflows. Absolutely massive. Now, legacy and liquidity may cap our upside, but I think flows will also buoy us on the downside on the crypto side of things. So I take comfort and solace in that thought. Most of this, of course, coming in BlackRock, most of it coming out of GBTC, but undeniably massive, massive week once again in the individual assets, a little bit into short Bitcoin, a decent slug into Solana here on a weekly basis. And here's the Sol ETH trade, just worth maybe keeping an eye on as it's swinging back favorably into Solana land. I don't know what other is, but you know, something else today. Ripple up 20%, Litecoin up 20%. I don't think this is a top. It might be an interim top, but usually that's not a great sign of health in the market when the last three apocalypse horsemen show up. Okay. Something like Ripple and Litecoin. As far as global flows, mostly in the United States, and the flows coming out of other countries are probably coming into the United States products because they are cheaper. James also released a report on a Bitcoin demand shock, what that looks like for commodities, what that means, how that happens. He discusses having in here. This is very good. Talking about new supply per day versus what is being purchased for a long-term hold. And as many people have pointed out, yes, we will eventually one day have massive outflows in the ETFs, much like Ethereum in 2017. If you can remember, 2018, it gobbled up all of that ETH into ICOs, into ICO treasuries, and then during the bear market that starts to roll over, has a compounding effect on the downside. The good news is we are so far away from that happening because people are still onboarding, and that's going to take some time. So this is an under-owned asset. People hate this thing. Okay, nobody wants to own this, but it's getting big enough where they have to. So yes, we can talk about the bearish side of ETF flows, but that is probably years away. Okay. In any event, give this a read. Great article from James. One thing I forgot to mention yesterday that helped prop us up today was Saylor came in and bought $822 million, 12,000 BTC with an average price around 68.5. That's effectively a full day of ETF inflows. So it's definitely hard to keep price down when we're having these kind of inflows. Now, Saylor's not going to come in and do this every day. Okay, but it definitely helped prices in the near term. For the legacy calendar this week, all eyes are on CPI, Consumer Price Index, along with core CPI. There's some other stuff in here, retail stuff. I'm not really concerned with most of this, but the big one is CPI. Here's what I think is going to happen this week. I think CPI is going to be hotter than the market wants it to be, and I think the market's going to get angry on that, aka roll over a little bit. So we'll see if that actually happens. Another issue with inflation right now is we are diverging strongly from trueflation. Trueflation continues to crush lows, continues to sit at lows, and this isn't the government number, so this is just a real-time estimate. I think in 6 months we'll get here, but in the meantime, CPIs are rising while trueflation is falling. If we look at the Fed's own Fed Nowcast, they have CPI rising month over month. Now, they were very wrong for January. January they had coming in lower, and that came in hot. So it's perfectly possible that this month's February print comes in at less than 3.1. I just don't think that's the expectation. And if it is, we can have a party, we can have a good old time. But these month over month prints are slowly creeping up on CPI. So if we go from 6 cuts expected in the market to a hike, which would be insanity, but not out of the realm of possibility, I just don't think they're going to hike in an election year. But if the data calls for it, they will. The other thing is unemployment, which I'll get to in a second, has started to curl up a little bit. Reverse repo, look, this is something that took me probably 6 months to figure out. The long and the short of it is you give money to money market accounts. Money markets then have the decision on where to get that yield either short-term treasuries or this facility called overnight reverse repo. Previously, there was no short-term yield, so they went to the reverse repo. As the short-term yield grew with rates up, money came out of reverse repo into yield because short-term treasuries, because that was where the better yield was. So the good news is we had 2.5 trillion to drain out of this thing. The bad news is we're down to less than 480 billion. This may finish draining this month. It may go to some asymptotic level around 400 billion and just sort of sit there for a while. You can separate this out by entity and see who this is. Some of these entities have just, a baseline 50 to 100 billion or something. So it's not going to go completely to zero most likely, but all this just means we don't have much left in the liquidity faucet, in the pool of liquidity to bring back into the market. This was from Mike Wilson months ago. He is a famous bear Morgan Stanley analyst. He finally woke up to the fact that the reverse repo, this is when it was at 800 billion, was bullish for markets. Liquidity was increasing despite QT, despite rates rising. So clearly this was and is having an effect on markets. So the question is, what will the Fed do next? Do they taper QT? Do they cut rates? Do they flip to full-blown QE? Probably not. Do we enable some other sort of stimulus in some way? Or do they want liquidity to get tighter if things just start to break? I mean, that's the other side of the equation. So just something else to continually watch. And don't believe me, okay? Cross-border capital is the liquidity king as far as measuring and estimating what's going on there. And even they are admitting that, yes, we are on an upswing on a cycle basis, but in the near term, liquidity could stumble temporarily within the next few weeks, as he's saying here. So that would align with my bearishness. Okay, it fits my narrative. But I trust Michael Howell more than anybody in regards to this stuff. And it's just something to continue to monitor throughout March. Moving to the Fed rate probabilities, they are unlikely to raise this meeting. At this point, unlikely to raise or cut, for that matter. Next meeting, market's still pricing in a bunch of cuts for the year. It may come down to the Fed fighting unemployment versus fighting inflation. At that point, I think it's stagflation. But what are they going to do? If inflation is holding at 3.5%, is that good enough for their target? No. If unemployment is curling up to above 4%, is that a warning sign? Yeah. So they have some interesting, tough decisions, especially in an election year. Biden came out last week and said he's pretty sure rates are coming down. So we'll see what happens there. But I don't think Powell is going to come out this meeting and on the 20th and say, oh, rates are for sure coming down in May or something. I don't think he's going to flat out say that just yet. But I'm sure the reporters will drill him on the unemployment numbers, which are slowly starting to rise here. Looking at GDP, it looks fine. It's in the wheelhouse of 2% again. For the amount of money we're spending as a government, we better get some return here on GDP. Certainly not in the inflation territory. Back to yields for a second. Week over week, the belly of the curve, yield-wise, had been rising. I don't know what happened from last week to this week to really jostle the yields much lower, but even the 10, 20, 30 year, the long end, yields came down. Yields coming down a little bit on the short end. Some topsy-turvy stuff going on. 10-2 yield remains inverted on the curve. It's below the 30-day moving average, which I don't think that's ever happened, where we've gone above and below the moving average there. And as you can see, the last unemployment print taking up ever so slightly. And, bears have been saying the end is near, the rapture is coming. For 2 years, they've been wrong. Okay, I still think we have time on the clock here. So long as the yield curve remains inverted, I would just prefer to see a little bit of a pullback across the board, something worth buying versus up here where things just look tired and overextended. So before we talk about charts, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. And if we look at the interface, all these pieces are modular, and once you log in and have an account, you can move everything around, make new layouts, add new widgets. I mean, this is something I wish we had in like 2013, okay? But as far as the Bitcoin chart, we had that Sailor purchase. I'm guessing it was, around the time price went up. I don't really know. But what we have up here on the low time frames, not that I'm looking for reasons to be bearish, not that I wasn't in a leverage long here. That's not why I'm like angry or trying to revenge trade this. This does look a little tired, even on low time frames. So I'm in no rush to jump into anything up here on the Bitcoin side. I think across the board, especially with Legacy getting angry, potentially, I think that's going to be a good time to just sit back and watch the fireworks happen. If we go to like the daily cloud, I don't think we can realistically get down to 56K, for example. So I don't know where pullback would go. I don't even know what the chart would look like at this point because there's not really any specific chart pattern here that looks particularly bearish. We just feel a little overextended across the board. So let's start with DXY. I mean, we have halving coming up for Bitcoin, right? There's certainly not a bearish call on price. Like I said, dips are for buying. You just have to make sure if you're expecting a dip that you have something to buy the dip with, right? If you have 100% risk here, maybe you take some off and maybe you prepare for that. DXY to me still looks very bearish. It is certainly ranging. You could argue it's neutral. That would be fair. Last week's candle was quite bearish in that it fell below the weekly cloud. The weekly cloud remains bearish. So the trend here on the weekly continues to lean bearish. Now, if we were time warped back to 2022, that's a different story. We aren't above the weekly cloud. We aren't twisting the cloud bullish. I mean, this is what Bitcoin likes. Bitcoin looks like right now, right? On the weekly. So we are setting ourselves up for a very bearish, potentially DXY going into halving, which is another tailwind for price to keep going. So I love what I'm seeing on that side. As far as the indices, I mean, this is QQQ, this is S&P. S&P, you could probably argue a channel instead of a rising wedge. The target on the previous pattern is a little higher still. So I don't think there's some urgency to take profit up here. There's just nothing telling me that this looks attractive to jump into. I don't see it. This may flatten out over the next week or two with a complex head and shoulders or something. That would be even more of a bearish reversal call. So it's a little early to get that bearish. I just, again, don't think there's anything here that I want to buy. I mean, QQQ as well just does not look like anything I want to touch. You can see the support there at around 430. You can see the channel support there as well around 430. So maybe over the next week, we'll see what happens if we fall out of this channel. To me, that's more bullish than bearish because it says we can finally take a little bit of a breather, and people who are looking to get in, looking on the sidelines, will have an opportunity. The bears will think they're temporarily correct as prices are lower than they were last week. Okay. But after a multi-month channel, to me, I just doesn't look like a great buying opportunity. Maybe you buy gold. Maybe. It's at an all-time high. This is breaking out. It's got plenty of room to run on near-term targets and long-term targets. I honestly think cash is okay for like the rest of the month to let prices figure out what's going on here if you're taking a little off like me. But I think gold is also fine. Because this is the macro vid, I just like to mention, if you want to trade this on something like Kraken, PAXG is the gold stablecoin. There are certainly risks with custody and market price and yada yada regarding PAXG, but if you want exposure to something like gold in a crypto account, it's available. Should that be attractive to you? I know that gold and crypto has a lot of overlap in those communities. So I think this might be the chart of the video as far as something I'm most bullish on. I think everything else is kind of just blah. Oil even not quite in the weekly cloud, still trying to figure out if it's a head and shoulders, a mega head and shoulders. I'm not really bullish oil here either. It's just there's no real trade there. The other trade to watch would be TLT, which on the weekly chart is signaling a potential edge-to-edge move from 95, 96 to like 113. That wouldn't really make sense to me based on the fundamentals of issuance, prices versus yield. But that's what the technicals are signaling. So we'll see if we get that. But that would be the other chart that I'm really maybe excited about. I don't think I'm trading TLT, but if I'm looking for something, that looks certainly like a tradable chart. Now we get to the rest of these charts, which just do not look like anything here. You know, I much prefer a breakout trade. I much prefer a trend flip, a chart pattern, anything. NVIDIA up here, rolling over once again. It doesn't mean that these are over, but they hit their near-term targets, and I just don't know what you do here. I don't know what there is to be excited about up here for NVIDIA. I think it just needs some time. I like things to take it slow, so look, if it takes all of April to figure out what we're going to do, love it. I just think by the end of March, we will know what's going on. SMCI, same thing. TKC clamp on the daily, way ahead on trend. 750 would be the level. Maybe this morphs into head and shoulders over the next month. I don't know. Just looks very overextended. AMD, like much of the chip stuff, had a cup and handle, hit the target. And, you know, look, I took profit on my SMH position. I took profit on my Amazon position. I took profit on ETHE today. I just don't know what there is to be necessarily bullish about when we're hitting our targets, when things look overextended on trend. I just think things need a little bit of a breather. And here's SMH on the weekly. Same thing, hit that cup and handle target on the top side. Pretty ugly close last week. Even if this just burns off time-wise and goes sideways and just ranges from 200 to 240, let the moving averages catch up, let the cloud catch up. That is also acceptable. It doesn't need to necessarily retrace to, let's say, 180. But if I was looking to get in on any of these charts, go to the weekly or the daily, pop on the legacy cloud, and find the Kijun. That is the level where prices want to go if they are mean reverting. Microsoft, same thing, cup and handle, barely grazed the target. And if you zoom in, you can sort of see it there on the high time frames. But if we zoom in on Microsoft on the 4-hour, this to me looks like a complex head and shoulders, looks angry, does not look like continuation at all. Now the flip side as well, if it gets back to 415, then you just argue some sort of flag. But I just can't be bullish on something that hit its target-ish and looks like a head and shoulders. Here's Amazon, kind of a similar vibe. Barely grazed its fib extension target and just doesn't look excited to be here. You know, kind of looks like it wants to go home, whatever that means for Amazon or Microsoft, but it just looks a little bit overextended. For weeks I've been saying on Meta, I don't know what you do with prices up here. Last week was a spinning top on the candle. The cloud likes like 350. Okay. So across the board, I'm just not seeing signs for continuation. Google I like as a cup and handle into probably the second half of the year. I think just this needs some time. This needs to figure out its AI story, but also not very exciting looking at this point in time. Netflix, again, similar to Meta. I don't know what you do with this up here. Certainly, I'm not a buyer at 600 when prices are just straight up like that. 465 would make more sense to me. Now for the crypto equities or crypto products or crypto adjacent stuff. This is ETHE. Something else I didn't like today. Feels like the ETH ETF approval sentiment is waning a little bit. I'm already bearish on the prospect of an ETH ETF without a fight. I think it's going to need to go to court again. To be clear, the SEC will lose, but I do think they will put up a fight. So I'm certainly not as bullish as a lot of people are on the ETH ETF, but I also don't like that the discount is starting to grow again a little bit. This could go to 250, I don't know, but it just felt like enough was enough for me. I was up over 2x on this position, and it's already well through the cloud at this point, right? So I just think taking a breather makes a lot of sense to me. Slightly out of order, but Apple also had that head and shoulders coming all the way down. Not an exciting chart. So all of the Mag 7, all of the indices just don't look super exciting to me. Tesla, same thing. I mean, this is at risk for falling out of a diamond top. This measures to below zero. It won't go to below zero, but it's certainly not bullish. Okay, it's already been bearish on the cloud for many weeks. Had this triple top monstrosity. I just don't think this thing is worth touching at all. Another thing I saw come across about Tesla, it looks like they have been buying Bitcoin with their treasury. I don't think that's official yet. There hasn't been a headline on that yet, but based on the on-chain forensics, it looks like they've been buying. If that's true, we'll probably get a pretty good headline on that on the Bitcoin side, but I don't know how that's particularly helpful necessarily for Tesla. Maybe it helps their earnings or something, but this is not a bullish chart by any means. ETH BTC, however you want to think of this, ETHE GBTC, Also just middling, kind of flat. There's no winner here. And it says maybe later on in the year you'll get a move here favorable to ETH, maybe relative to some eventual ETF approval. I don't know. But at the moment, this is kind of ranging and trendless. ETH Classic, the only other grayscale product with a discount through the weekly cloud, broke 13. I don't know how I feel about this trade in general, but if you like the discount, the trade's for you. If you like the technicals here, the trade's for you. The problem is ETC just not exactly a bullish chain with a pulse, let's just say, fundamentally. But that is an option for those brave enough looking for something with a discount. Miners getting absolutely taken out behind the woodshed today and have been for quite some time over the past couple weeks. This is WGMI, the ETF, could not hold above 20. It was setting up for a potential low time frame head, inverted head and shoulders, higher time frame cup and handle, even higher time frame inverted head and shoulders. I half wonder if this is just going to be an ugly range, an ugly tight range throughout the rest of the year. I don't think you can touch this until it's back above 20, honestly. Very range bound, very noisy. Lots of people who remain extremely bullish on miners. I wish them luck. But the tech just is not there to be bullish on miners right now, in my opinion. I think this stuff needs 3 to 6 months post-halving to figure out which miners are here to stay and which miners get acquired, basically. So certainly not a bullish signal for miners. Coin looks fine to me. I don't think there's any new notes here. It's in a bull trend. It's in a pitchfork. Kathy Wood's probably selling on ARK because it's X% of the holdings or whatever she does over there. It has started to lag BTC a bit. But if the ETH ETF sentiment gets more bullish, I would expect coin to pick up a little bit. But again, this isn't something I want to buy here. I just don't. MSTR, well outside of the pitchfork. Again, this could go to 5,000, I don't know. But this just doesn't look like anything for me right here, right? As an entry, it just looks a little bit overextended, well above the pitchfork there today. Doesn't mean it can't just go into a hyperbolic cyberspace to Mars and beyond. I just don't see an entry on that here. Square is probably one of the better ones. To me, it's in the weekly cloud. Bullish TK cross. It does well post-halving, or has done well. So it does look decent as a setup. And then there's Hood, which also looks okay, you know. None of this stuff looks super inviting to me. None of this stuff looks like I want to come down, have a drink, okay, have a conversation. These charts look like it's time for bed, you know. It's done. Like just take a breather, come back in a week or two. When I'm talking about gold and TLT being the most bullish charts, either I'm going to be turbo wrong pretty soon, or there's going to be a little bit of a pullback or a breather across the market. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.